welcome to our webinar episode. I hope you are doing well. So, one more time, we have Mr. Pankaj sir for today's webinar. I am Ravinder Kandari, host for today's session. So, this is our third episode with Mr. Pankaj sir. So, our topic for today's discussion is how to manage positive cash flow for pre-stage startups. So, Mr. Pankaj sir, how are you doing today?
Very much fine. Thank you for again and again inviting me. It giving also me
Pleasure, sir.
energy that some kind of thoughts I carry, they are being very well taken by the industry. Practically, I am a very down the line person who believe in the practical conversion of the concept rather than building a sub modules on a minimum viable product that it will be some theoretical good product, but not maybe a practical. So you can go ahead with the session. Thank you, RaiseMoney, for inviting me, and Ravinder, who is lot of doing follow with me. And I fail miserably most of the time, but he never fails. So in front of all the audience, I say sorry to him, so that I will be try to stick to my schedule as possible.
No problem, sir. No problem. Even I appreciate like you have a very tight schedule and you're taking a time for us. So yes, we can take this session forward. So my very first question is that what is the cash flow of any company? What exactly the term means?
Yes, sir. You are asking, Ravindra. I must say that you have a good sense of humor and you have a good sense of economics, and all the situations moving around are beautifully grabbed by you. I can understand that you have framed this question by reading some of the points coming 2 days back that Zomato is now in a cash profit first time. It's an operating profit first time in the 13 years of these operations. The company is coming in the first time in a profits. So there is a relevant questions in the current parameter. Similarly, as of the last day, there is a news of Meesho that Meesho is first time going in the profits and they are soon going for IPO. It's a victory for, you can say, the startup entrepreneurs who taken a very bold step in the initial years around 5 to 10 years back, and they fighted with their own spirit and hard money of the investor was very much burned. Here comes the point of burning, right? The company in the initial years don't have much funds or cash, or bankers don't much give loan, or government subsidies are on a very peanut style. So these kind of investors, angel investors, they put heavily faith on the startup concept and they bet on their ideas, like in the long run they will earn a good amount of a profit or a cash flow. Now cash flow means cash flow of cash. It's a derived the term from there only. A company, for example, has an expenditure of around 10 lakh rupees a month, around 1 crore 20 lakhs in a year. So the company should be able to generate that much of cash. You can say that much of revenue, that much of sales, that much of input, that a yearly expenditure of 1 lakh 20,000 is absorbed by that cash flow. For example, if in the initial years of Zomato and a Meesho, when they launched, they were not able to cope with the, suppose the expenditure was 10 lakh, and they were able to generate 3 lakh or 4 lakh rupees of a cash flow. Cash flow means the booking was done and cash was received from the customer. That amount was around 4 lakh. So what was the shortfall? You have to do expenditure of 10 lakh per month for employees, for marketing, for management, for operations. So 4 lakhs will be coming in. That will be your only cash flow. So that time the company was in a negative cash flow. Negative cash flow means when your cash is less and expenditure is more. In this case, expenditure is 10 lakh and cash is 4 lakh. So 6 lakh is minus. So from where do the 6 lakh will be coming? You have to pay salaries, you have to pay all. You cannot say you will be hurting in the newspaper that Dunzo has run out of cash. They are not able to pay salary of 3 months. Many startups are not able to pay salary of 6 months, means they are running out of cash. The cash is short means revenue is short and expenditure is heavy. The similar classic example in the Airbus is going about Byju's. They are not able to cope up with the expenditure they have put on and the income is very less. So that's why this cash flow is a very much important point which every startup budding entrepreneur should keep in mind. Most of them, they feel that I have a good idea, but idea needs only expenditure. It should be correlated with the cash coming in, revenue coming in, or profit you will get from that source. Because ultimately, after 1 month, 6 lakh is shortage. When the company will go in the second month, expenditure will be 10 lakh. That is not going to stop. So you have to, cash has to be matched this month 10 and previous month 6 lakh. So that is what companies in the third month again they require 10 lakh. Again, there will be shortfall. So if they get an expenditure of 1 lakh crore 20,000 and they will get a cash flow of suppose 70 lakhs. So 50 lakh where they are going to take? They have to take help from friends, relatives, or angel investors. So that when angel investor put the money, of the gap of 50 lakh, they bargain for it. You don't have a cash for running your business. We will be putting cash in it, and you should give us the stake to it. Right? So this is the biggest flaw which startup entrepreneurs are not able to understand, that every idea should be backed by have a positive cash flow in the company. Until and unless you have a positive cash flow for around 1 year, 2 year, you will not be surviving for the future projects. So in the initial year, you can go out of cash flow, or you may go cash burn. Cash burn means what is the expenditure that is more than your inflows. So this is where all of it is said that 98% of the startups fail down due to their ideas. I don't believe that there is any wrong kind of idea. Everybody entrepreneur has some kind of good ideas which he want to implement. Somebody thought of, but he mismanages all this cash flow. And ultimately somebody leaves 1 crore job, he invests all his savings, salaries, friends, relatives, and he keep on experimenting and burning the cash. So there is difference between cash flow and burning the cash, right? So this is what the cash flow is, a different concept which is very much a finance term, and every entrepreneur before starting a startup should understand what is cash flow. Because until he understands the cash flow, he will be never able to understand whether his startup will be going to survival or not.
Correct, sir. Correct. Cash flow is actually a very important, I can say, a kind of the tool, or you can say a term which need to be understand from the entrepreneur or a founder's side. Also, sir, I have seen that like the startup industry from the like pre-COVID or a post-COVID, right? So there is a term which means that like a startup, those who are earning good from the pre-COVID, after they are burning out X amount of money or 10x or 5x amount of the money in their marketing, or you can say a sale department or the branding, after that they have received the like, so I have just get to know a term, a cash burn, right? You also
Yes.
previously in just a statement you mentioned it, cash burn. So could you please tell me what exactly cash burn is, and if you can just add it out, how a startup founder can actually deny few of the aspect where they can just reduce their cash burn.
Yes. So now when we are going for suppose an example of making an industry, needs some kind of funds. And initial, suppose Ravindra has an idea that I want to develop and automated, like we eats an edible oil in houses, or mustard oil or coconut oil in the south part of the is eaten upon it. Now Ravindra finds that ki yaar isme milawat bahut hai. There is lot of rationing is being done. My family is at very danger because every time I have to eat the oil. Now Ravindra comes with an idea that I should develop a machine where oil can be made at home only. A simple common man example, each man affecting life, right? This is a kind of scalable project. I'm not discussing about many software industry projects because they are initially they require a lot of investment. I'm taking a small example where about few lakhs of rupees are required. So Ravinder will try to develop a product where the machine could be developed into 4-5 thousand, and oil or edible oil can be made out. Now for that research purpose, he need funds for research purpose. Whether income is going to be generated, not at all. You have to do research. For
Correct.
research, you need some cash to be kept, because you don't know your research will be lasting for 1 month, 2 months, or 3 months, right? But tentatively, Ravindra thought that I will develop that idea around in 3 months. So what he does, my experiment cost and all require 1 lakh rupees. So 3 month money kept with him, that money is in my pocket, so that in 3 months my research will be over, and after 3 months I will be going for commercial production, or I will go to the investor and I will show him the idea and he will invest in. Now in 3 months what Ravindra is doing, he is burning the cash. There's no cash. Inflow is there from any sources, cash is going to come. No, you have saved your savings for 3 months, that is 3 lakh rupees. So that cash which you are burning for research purpose, experimentation purpose, marketing purpose, designing purpose, where no income is going to come to you, that part is called cash burn. And cash burn is said that for how many months you have a cash burn in your months. Like 3 months is your cash burn. Suppose your experimentation is not ended in 3 months. It will go into the fourth month. What you will do? There is a cash burn again. Any kind of revenue is going to come? No. So
No.
these founders make a basic mistake in cash burn only. They take the cash burn as a research cost, as an investment cost. They should consider that as a research cost or as an investment cost. But if the product is really going to convert into reality, if they are experimenting and they are not able to go to the public, means instead of taking 3 months, they have taken more 3 months, again 3 months, means their idea of 3 months is larging to 9 months, means something was wrong with the idea or something was wrong with the founder's thought process. So, but when you put the money for thought of 3 months, you have a cash burn for 3 months. How will you sustain for next 3 months? How will you sustain for next 3 months? So that this is the phase where most of the founders cannot discriminate between cash flow and cash burn, right? Cash burn is a burn which there is ultimately no revenue, or you have a few revenue, but without having any cash more than your expenditure. How can you take out the company? So that is a cash burn is a majorly difficult concept where founders say easily, we are cash burning. You have to understand, boss, it's not your cash burning. It's all about going money west if your product and research is not going to take off, right? If your product is not going to take off, where from you will recover the cash burns? There's no chance at all. So these budding entrepreneurs running enterprises, most of them who are in technological part, they are heavily investing in technology. But as the advent of technology is getting, even ChatGPT finds himself that it's my last day of working. Every bigger technology is thinking that the day is my last day. They are not thinking, they are not talking about 5 years down the line. They are not talking about 3 years down the line. They are talking that, yes, even ChatGPT owner has tried to develop a gold coin. Why? Because he knew that ChatGPT will get a competition, and so when you put heavy money in kind of research, then you should be able to rip up immediately. Suppose you have developed 2 years cash burn, but your product should be so capable that it should recover your entire money in 2 months. Then only you can have a cash flow, which will be required to generate your running the other business. So the business and entrepreneur should understand that once your cash burn is done and your company turns into the profit, like the example of Zomato, like the example of Meesho. Immediately when Meesho came into the profit or they have a positive cash flow, they said that we will go for IPO. So the next step of cash flow is automatically related to your scalability, successful business model, and immediately you can go public and raise money from the public by way of IPO. So these are the steps that ultimately cash is the boss and cash is the king of the startup industry. Until you make a proper triangle fitting to it of cash flow, cash burn, and this liquidity issue, you cannot run a successful startup. So when most of them, I'm not a conservative player, but I'm a conservative on the point of cash burns. Boss, kahan se aap karoge? Where from you will bring the cash? How many times you will beg? So before launching a product, before launching a services, before launching of any technological platform or any kind of, evaluate the cash which you have, then only start that project. If you have a cash of only 10 lakh rupees, don't think of product of 2 crores. Take a baby step, take a smaller step so that your cash burn is slow and company should come in revenue, and then it should go to the IPO. IPO means your company is 100% cash flow. If you go for a negative cash flow in IPO market, you can face the music which was faced by Nykaa, same music faced by Paytm. They were top of the market on hyper boom, but if your company is not generating cash flow, it will suddenly come down, because investor will never invest in a company which is giving continuously long-term cash flow, which is negative. Right? So this is what cash burn, cash run. Cash run means for how many days you have left cash with you. That is called cash run. So that is what you have. It's a runway or it's a highway, you can say, about the cash run, which you can encash upon. This I'm very much feel sometimes delighted and sometimes feel very disappointed. I've made many kids in the school and colleges. They try to build up the product in a 40,000, 50,000 mark range. Means I've seen a contradictory view of a entrepreneur who is doing a job or a business industry. He think of robots making in a 2 lakh and 5 lakh rupees. But I recently visited a government college where a guy made a robots at a cost of only 40,000. Because he thought that why to spend the money on robotic machinery and buy it? Why to not should make from scrap? Ultimately, it's a sustainability project, so cash flow can be controlled over there. So you will be never have. So try to introduce the substitute products for making research days where you can get from waste, where you can get from a factory that is a raw material or a side product for your friend. That may be a product for you. So before starting a product, you should always understand that how to eliminate cash burn in the initial days by way of raw material, which can be easily and cheaply available. Right? So this is what, now you may be hearing a few days back a story of Bansal brothers existing from Flipkart. Why they are existing? Because their all cash is burned. They have no cash flows left with them. Ultimately, they have the chance to sell their equity, bring in the cash and run the company. So founder, every time when they have a negative cash flow, they sell 2%, bring the cash, 3%, bring the cash, 4%, bring the cash. Ultimately, slowly, their equity is out, all cash is out, and investors are in. So it happens. It is happen practically. Those who are founder of the products are never at the end. This is the magic of cash flow and cash burn if you do not manage properly. If you keep on burning, your equity will be burned. That is my common say to them. If you burn cash, your equity is burned because there is no other source where you can put on the funds. They feel that 100% तो बहुत होता है, 100% is bigger amount. But when the slowly every month negative cash flow or negative cash is there, no, 1%, 2% is not a big deal. 2% is not big deal. But when 1 year it goes 24%. Second year, it becomes 48%. And suddenly you lose the control of it. So this is what initially bigger companies also had made a mistake. If you're watching a Shark Tank every time, many times founders said that don't dilute your equities. It will pain you in the long run. It will give you a lot pain in the long run. So try to maintain your cash flow in your control and make products suddenly viable, and instead of doing the cash burn, try to convert cash in positive way so that your revenues are there. So there is some kind of thought process which needs to be understood.
Correct, sir. Correct. Thank you so much for giving us such a explanation point of view. I also created. Also, I feel that just a basic statement that to survival any kind of the industry, any kind of the product, or any kind of the startup founders, cash burn or cash flow can be a backbone of your startup, right? So my third question is that, so what is the financial module for cash flow and the cash burn?
Yes, there are a lot of ratios. In one of my magazine last week, I have published ratios, which you need to understand that what is your cash in terms of expenditure. Like, for example, in my previous example of 10 lakh rupees, 10 lakh was expenditure and 4 lakh was your cash coming in. So ratio is 20, around 40%, 40% you get revenue and 60% is your losses.
Correct.
So this is the ratio, financial ratio. Next ratio is cash liquidity ratio, cash flow statement. Current assets divided by current liability. Means how many assets do you have for liabilities? For example, if you have a cash of, for example, 4 lakh rupees and you have an expenditure of 10 lakh rupees. So you have only 0.25 cash for a 1 rupee. For 1 rupee of expenditure, you have 0.25 only cash available to you. So 0.75 will be burned from outside. So there are some financial ratio which, and startup budding entrepreneur, I will suggest from my angle, before starting any startup, they should at least catch their some friend and should understand the financial model, various ratios of sale ratio, purchase ratio, expenditure ratio, fixed asset ratio. Around 200 ratios are there, which current ratios, debt equity ratios, means what is 2:1 is the ideal debt equity ratio. Means, for example, your equity should be double your debt. Means suppose you have taken a loan from a friend that is 10 lakh rupees, then your fund should be 20 lakh rupees. That is debt equity, means how much is your own capital and how much have you borrowed. For example, if your own capital is 20 lakh and you have borrowed 10 lakh from your friend, that is debt equity, means 20 divided by 10, that is 2. Means for 1 rupee you have borrowed, you have 2 rupees yourself. Now what happens when your capital is 20 and you borrow 10 more from your friend? So how much it happened? 20, 20, that is 1. Means 1 year and 1 year friends, right? Now next, what happens when you borrow 20 lakh from outside? So your is 20, outside is 40. So 0.5 means the ideal ratio in the industry is 2:1. When you go below 1:1, you are certainly in a danger. So when we get a balance sheets of a startup, we study the ratio. We can say that your ratio is distorted. Your planning is not proper. You have not managed your cash properly. You have not managed your inventory properly. You have not managed your debtors properly. You have not managed your creditors. For example, debtor ratio and creditor ratio means in how many days you pay to the creditors. For example, you get 4 lakh rupees cash flow. You get 4 lakh rupees a month and you have to pay to your creditors 6 lakh rupees. So when you get 4 lakh, you pay only 6 lakh. So 2 lakh will be paid in the next month. Ultimately, you got delayed. If you got material from anybody for 30 days credit and you are paying him for after 45 days, right? Now, one of the leading startup got a notice, legal notice. Dunzo got a legal notice from 6 entrepreneurs whose payments were due. If you borrow from a market for a 30 days credit and you pay them after 45 days, you pay them after 60 days, what is going to happen to your startup? Your name is ultimately going to be spoiled. So these kind of, there are almost 200 financial ratios which need to be understand. Asset ratio, stock ratio, debtors ratio, many ratios are there which are linking to their financial model, and there are some parameters set for it. There are some standard parameters set for it. Every industry has its separate parameters. So if you link with that parameters, no, you can understand, oh, I'm not on the standard, like debt equity 2:1. If your debt equity is 3:1, that is good. Means your capital is good and outside is less. This is very good parameter. 4:1, that is good. Beyond 2:1 is very good. But beyond 2:1 means you have to borrow each and every time to your friends, relatives, bankers. So these startup founders keep on asking money and every month how to run the startup, because they totally fail on this ratio part: cash burn, cash run, and cash flow. So before, don't feel that I'm a chartered accountant, so I'm encouraging the startups entrepreneur to study finance, or no, it's in common sense. Even though when you run your home, आपको घर चलाना है, you have to run your home, you plan according to your budgets. No, 50,000 is your salary, you can spend 60,000 by way of credit card, but ultimately 10,000 has to be paid next month. No, credit card has only given you credit for a shorter period. It is not that the money will be wiped off for everybody. That's why most budding entrepreneur, what they do, they take this kind of shortcut routes. They buy a credit card for their business entrepreneurship. This month we will pay it, we'll get 50 days credit, फिर we will run turnaround, right? So all the expenditure when they do through this instrument of cash credit or to the credit cards, to just run for 50 days from their initial cost, ultimately investor will see them from where you are doing this cost expenditure. Then he will say, I do from credit card. Means for 50 days, you will be not able to pay your creditors. You will not only spoil the name of the company, but ultimately the name of the investor who has invested in such company. So does ask you ratios. What are these all ratios you upon? Cash burns, cash flow. The major point and budding entrepreneur or a startup entrepreneur or any business entrepreneur, if you go to the traditional working, like before the era of startup has started around 10 years back in India. When you go to back to 10 years back, when traditional businessmen were there, he used to make a project report. Actually, I personally don't feel that pitch desk give you all the information. It's just in summary points. It
Correct.
never give the cash flow position in pitch desk. Before 10 years back, all the methodical businessmen, they used to observe project report. In project report, there was a cash flow for 10 years. Banker used to question how you will give this cash flow as a positive. Now these concepts are changing. People are saying that ये तो startup है, it's need pitch decks, but ultimately banker, investor, everybody will see the cash flow now. It's a shortest way to represent ourselves, that is pitch desk. It's an only information. It is not a concluding point. So all the startup entrepreneur has to keep the cash flow ready with them. And budding entrepreneur or investor, I like my this, or VC capital, my like my, or a person, I will ask them, make your cash flow, show me when your company is going to in cash profits. If for 5 years you are showing that the cash will be negative, from where you will be getting the funds? My funds will be dried up in 1 year. After that, I have seen in many seminar conferences, I have seen that investor who has invested in startup are roaming around with the product. Startup founder, they both are roaming, give us the investment. Means this kind of situations I have observed in many seminar conferences, that founder and investor both are going and searching for money for their product. So the people ask, as an investor, what you have thought if you are again in a negative cash flow? So this all analysis has to be done. And before, on a serious note, I'm very much serious for these cash flows, because until you are serious for a cash flow, nobody will be going to fund you in any way. Because last month board has been came out by government also, 77% is a decline in the investment in the startup industry. So previously many people got some Excel sheet, Word, point presentation, they got the funds. Now it's not going to happen. If somebody is there, it is a lucky guy who gets something on a technological part. But now the investors are more serious, and you need to keep continuously watch on the movements of the how the cash will be generated and cash burn in the initial period before starting the product. How many months you can survive without having an income? So that is the point they have to understand. And ratios, there are a lot of ratios we has to be studied. Once at least you read and understand.
Okay, so that's it, sir. Like what I feel is that you already covered my last question. So actually, the question is that, like, what are the long-term effects of negative cash flow and the cash burn? But we
Yeah,
already closed that point, so I believe there is no sense of
it's,
asking this question.
I appreciate your view that you have made a presentation logically as per the viewers required, but
Okay,
all are the interlink point, right?
that's
Until
correct,
and
sir.
unless, yeah. So this is
Yeah,
all because ultimately startup founders think of input, investor thinks of output.
correct, correct.
What I will get at the end of selling this startup, or what I am going to gain if it goes to IPO. Ultimately, his thought will be linked that way. Now, I bow success to Zomato after 13 years of startup industry. Masho is gone very immediately profits. I'll here pinpoint one single point. I'm appealing to all these investors, all to these budding entrepreneurs. Invest in the product that are going to affect each and mass and class.
Correct.
Then definitely you will find Mesho sells all low value products. It is not selling any high value products, 199, 200. So they get the mood. 80% Indian economy is on that part. So that is going to, don't, if you see any stylish brand or any good brand, they're not being going to the profit because their market is very less. The more and more Mesho type industry, more and more Zomato type industry, Zomato industry will be successful, no, more and more entrepreneurs will be thinking, because a successful startup like Zomato, Mesho will give work to thousands of startups. They individually cannot work. Daily
Correct.
new technology will come. They cannot develop. I was with Mr. Nikhil Kamath of Zerodha in one of my CA conferences. I asked the similar question to him. He only says, my staff strength is 1100. My when turnover was 1 billion, right? My turnover is now gross receipt is 12 billion, and my staff strength is same 1100. I have not increased the staff strength, but what are the technological changes? What I have to done? No, I hire a startup for completing that task to me, and I pay them. My work is over because they are not going to work entirely for the. So this is what budding entrepreneurs should say, that they can be part of some successful startup and they can provide service to them. So these kind of startups need to good attention, and there will be no cash burn, no cash flow negative. in the long run, they will be a beneficial step, because if they help to Meesho, they can help to Flipkart. Like they can develop a delivery system for them. They can
Correct.
develop a purchase module for them. They can develop sales module for them. They can develop training module for them. Just make a product and go to this industry. We'll develop a purchase module for you for this industry. We will make you purchase module for shoes. We will make a purchase module for textile. We'll make, you don't sell chemicals. Meesho, Flipkart don't sell chemicals, chemical, industrial chemicals, or some kind of other products. So you can go, we'll develop this vertical for you. They are
Correct.
not going to hijack your ideas, because they feel that hijacking an idea will again require their capital expenditure. They feel that when it is going to happen in a free, on a referential model, commission model, why to invest in such kind of innovation? So this kind of entrepreneur should think, maintain cash flow, maintain cash burn, and develop a successful startup. This is what my mantra for it.
Okay, sir, that's it for the day. Thank you so much to give us your valuable time. It means a lot for us.
Thank you
Yeah,
very much, sir, for the
that's it.
opportunity. I
Correct.
hope all questions are clear. Yeah, thank you very much. Have a good
Definitely, sir.
time.
Even you added like more advice to the startups, how they can survive in the market.
And happy
Yeah,
Independence Day from my side to all the viewers. And this is our best time to invest in startup and go with the rocking ideas and be a big entrepreneurs, because the cash flow issue is going to solve in India. Many budding
correct.
entrepreneurs take a positive note and move ahead.
Okay, that's it for the audience. If you like this session, please do support us by giving your likes and comments. We'll be backing up with the more webinar interesting topics. Till then, bye bye. Take care. Bye, sir.
Thank you very much. Have a good time. Yeah.
Same to you, sir.